Hello, it's Big Chuds. This is the Trading Encyclopedia Daily Education series on my YouTube at Chuds Trading. You can find me on Twitter at Big Chuds and Bitcoin Live, where I'm a founding analyst. For today's lesson, we're going to talk about the idea of lower wicks and why we should pay attention to them. If you've studied Japanese candlestick theory, Steve Nissen talks about a concept where bulls reject lower prices. The price is moving down. And let's take, for example, a hammer candle, small real candle body, lower shadow at least twice the length of the candle body, right? So in this case, with the hammer candle, bulls are rejecting lower prices. They push the price back up. This is one example of a bullish pin bar, and you see the lower wick. We also have something like a dragonfly doji, similar, except you have just no candle body. Bulls are rejecting lower prices. Here's other examples, right, of southern doji. You see the long lower shadow here on the hammer, even a little bit on the morning star. But the concept is that you really want to pay attention to wicks and lower wicks. Lower wicks are telling you that bulls are stepping in and rejecting lower prices. So oftentimes when you see them, there's a bounce coming. We see, for example, here, we see these two lower shadow candles suggesting there's a move up. It doesn't mean it's a move to all-time highs, but it's very often just a move back, at least to the mean or to the MA20. So you look when you see a cluster, this cluster of lower wicks gave you a sense that there was a bounce coming. So when you see the price consolidating and you see it in a range and you're starting to get a whole series of lower shadows. Here we have the lower shadow, and then we have the hammer candle below the lower Bollinger Band. Nice little bounce there. We're starting to see a series of lower wicks here as well. Big lower wick. Big lower wicks. You start to see when you have these lower wicks forming. Here, big lower wick candle, decent lower wick, a little bit of indecision here, but we're getting these long lower wicks, and even on this candle, it's a predominantly lower wick candle. When you have a high wave candle, you want to look at, high wave meaning you have long upper and lower shadows. You can look and see, even though it's something like this, maybe high wave, it's predominantly lower shadow featured, meaning much more of bulls rejecting lower prices, to use that concept again. So you look at these lower wick, big deep lower wick on this, great example of a high wave doji or high wave spinning top with a long lower shadow. So you really want to look at wicks. It's the same concept with bearish wicks. You see them up here as well, where bears are rejecting higher prices. When you start to see a series of lower wicks forming in an area, that gives you a decent sense, hey, there might be something brewing here. There might be a bounce brewing. So you really want to pay attention to lower wicks. Look at all these lower wicks, right? Especially after a move down, and especially in concert, in combination with something like the Bollinger Band. You have these dips below the lower Bollinger Band, and the price comes right back up into it. So you really want to pay attention to lower wicks. And that is the lesson today for the Trading Encyclopedia Daily Education series on my YouTube, Chuds Trading. Find me on Twitter at Big Chuds and Bitcoin Live, where I am a founding analyst. Folks, thank you so much. I'll talk to you soon. Big Chuds out.